everyone to Gold Asset of the Day for the 26th of November, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we go into this week? At the moment, we are seeing that typical counterflow move with gold that we've discussed many times at the beginning of the week, with gold breaking down to the low so far of $1,451 per ounce. Now, what's been interesting so far this week is that in the latest week, hedge funds and money managers have significantly again increased their net long positions in gold and also silver, in fact, too. And I'm expecting again range-bound trade for this week and the low to get formed over Monday and Tuesday, and then a revisit back towards that 1470 to 1480 region over the course of this week. So essentially, we're taking advantage of this pressure to the downside, the typical counterflow that we're seeing at the beginning of the week. We like these zones at the moment as long as we continue to get supported at these levels. It is important right now to be nimble with gold. You do tend to find very quickly these breakouts to the upside, they can get faded. So you do need to be quick also to take your profit off the table. But again, don't get too bearish, don't get too much in favor of the bullish side at the moment, but don't FOMO in as well. The real trick here with gold right now is to be buying when traders are getting quite bearish with the price action, and then essentially take profit off the table before the retail market starts to FOMO in, like we saw last week with gold breaking out to around 1478, and that was a fake breakout to the upside. We saw a sell-off later on in the week, but we'd already banked 370 points on our gold positions ahead of the minutes on the FOMC. What has been a real star for us over the latest week, as we mentioned last week, is palladium. Our palladium position, in fact, yesterday was up over 1,000 points in just a little over 1 week. We've seen a really significant move to the upside. Very strong seasonal play there on palladium. As I mentioned last week, platinum as well, over 2 trade, banked us 800 points. I also like silver at these levels as well, around that 1685 to 1690 level at the moment. From a cycle point of view, usually this week is range bound. As we progress into December, you do have the potential for quite a lot of volatility going into that second week, where we have the FOMC statement, we also have the European Central Bank announcement and the UK election on that week as well. So that will all be from the 11th to the 12th of December, and that can really provide some great opportunities for longer term positions on the metals as well, going into January and also February. But at the moment, I would really suggest you want to keep an eye, very close eye on the ranges week to week. At the beginning of the week as well, certainly today on Tuesday, we have started to see more uncertainties again between the US and China trade talks. This is providing a little bit of support to gold at the moment. So I would really watch this 1450 handle for evidence of buys coming in. Hedge funds and money managers, they have increased their net long positions again in the latest week. As I've mentioned before, there are lots of outdated technical strategies at the moment, which will be essentially looking for confirmation here to go short on gold, but I'll be really careful about that. We're seeing range-bound price action at the moment. Capitalize by buying in at the lower end of the range, selling at the upper end of the range. This works extremely well for the gold market at the moment. Palladium, again, I would keep an eye on that. Looks like we might be on track to break above the all-time highs as well. So I hope that helps you. And with that, of course, that's been Gold Asset of the Day, and I do wish you good trading.